Sanvanani Dumalan, good evening and welcome to episode 237 of the Private Property Podcast. I'm your host, Uzamantongwa Kumalo. It's a Monday edition of the show and we're having a full week. I feel as though many of us are probably, hoping that we'll have another long weekend soon. Well, we are starting, of course, on a Monday. We've wrapped up our Sherlock Holmes competition and congratulations to all of the winners that won throughout the 12 weeks. And of course, congratulations to the grand prize winner that walked away with that 30,000 Rand voucher. Well, we're kickstarting a new week and kickstarting certainly a new competition that we will announce in due time, because you know how we like to do it. We like to make sure that we brew up something very exciting to share with you at home. So do look out for exciting ways that you can win with us across our social media platforms. And talking of social media platforms, make sure that you follow us across all our platforms. We're on Twitter, we're on LinkedIn, we're on Facebook, we're on Instagram, and make sure that you give us some love across our networks. You can follow myself at Zamantungwa_K on Twitter as well as on Instagram. Now, one of the other things that you'll be able to find on our social media pages are, of course, the other great shows that we have on our pages. I'm talking about the Home Shoppers show that you can catch later on this evening. It comes to your screens every Monday and Friday, and Chad brings you that show. And of course, if you are in the market for a new property, or you just want to daydream about the next property that you might want to move into, then that is the show that you want to move into. Award-winning farmer Mbalino brings you the farming podcast for all of your agricultural needs, and you can catch that show every Tuesdays and Thursdays. So if you ever wanted to venture into agriculture, regardless of where in the value chain, then do make sure that you tune in to that show. And on Wednesdays, Esty Claassen brings you the First Time Home Buyers show, and that you can of course catch on Wednesday at 8 p.m. Well, those are some of the great and exciting shows that you can watch across our platforms at 8 p.m. So do make sure that you set those alarms. Now, of course, for our conversation this week, as we kickstart another great week in property, we're talking at why you should always use bank finance when you invest in property. I know a lot of people sometimes think of buying a property cash and probably want to, not use bank finance because they think, look, maybe it's not the most optimal way. They're looking at, having to pay back the bank or the interest charge. Well, we're going to look at why you should actually use the bank finance when you invest in property. And I'm joined this evening by Ekow, who's the founder and CEO at B Grand Holdings. Ekow, good evening, and thank you so much for joining us.
Good evening, Zama, and thank you for having me.
It's always a pleasure, Ekow. I think one of the first things, before we actually look at some of the reasons why you should use bank finance, perhaps first let's look broadly at how you should be looking at the way that you finance a property deal before we look at why specifically you should be looking at bank finance. Because I think sometimes people don't quite understand the benefits and perhaps the downside of how you should be looking at how a deal in itself is actually financed.
Yeah, so I think how people should be looking at bank financing, right? Because of it's two choices. You either use cash or you get a financier to fund your property or take out a home loan. And how people should be looking at that is to say, if you look at it from the cash side, my advice is always to see that you might be tying up all your money into one asset, and you might be having, in future, you might have liquidity problems if you want to sell the property quickly and get out of the deal. There are also, of course, some benefits to buying a property cash, right? You're looking at it and say, but I don't have to pay the interest rate over a 20-year period. I don't have to pay for transfer duties. I don't have to pay, but you must also know that you still pay for the legal fees. You don't have to pay for the bond registration and the rest. So basically, and of course, if you're buying for cash, you might even get a discount from the seller if it's an agent sale, and agents love you for buying cash because why? They know that you won't back out of the deal because you wouldn't be disqualified if you had to apply for a home loan. So that's one. But the most important thing also to look at is what do you want to do in future? So that's where the finance deal comes into play. Because with a finance deal, for example, if you buy the property for R1 million and you have to put in a 20% deposit, you will then be able to have excess cash so that you can invest it in other markets, whether shares or equity, or you can even do multiples of these deals. So that's the way people must look at it. They must actually understand, have the goal. They must identify where they want to go with this property that they want to buy, and then make a decision based on that. But the important thing is don't run out your emergency fund because you want to buy a cash deal and tie all your money in one property or in one asset.
Mm-hmm. And I guess then, Ekow, we should then look at why we should use bank finance. I think beyond why we should not use cash, what are some of the benefits of using bank finance? And later on, I want us to look at the creative ways that you can continue to access and re-access various funds from a financial institution by using your home loan as a vehicle.
Okay, so why do you need to use bank finance? One, you predominantly using somebody's money to make money, right? So you go in there and maximum, say you put down 20%. You buy a R1 million property, for example. The bank is going to give you that 800,000 rand. So you've used less of your money. You can do more with the excess cash that you have, and therefore you can be able to grow your financial portfolio better, right? The second thing is interest rate. For example, if the market turns down, right, and like the current market that we're in, if the market is down, what do? Your whole money is not tied in. So if you put R1 million in and you want to get out of this deal, you've got R1 million, and your money will decrease anyway because the prices are falling. So you've actually lost, which is to the extreme, but you've actually lost value on that R1 million. Whereas if you put in a 200,000 or 100,000 in that deal, you've got less skin in the game. So even though you feel the pressure, you wouldn't feel it as heavy as you've got a whole R1 million in the deal. So that, and also tax benefits. So even if you buy as a home, a personal home to stay in, there's still tax benefits that you get like on your property if you do the finance way, the bank finance way. People like us, while we buy majority of our property for investment, we actually don't have to worry about the interest at all because the borrowed money is not, interest on borrowed money is not taxable. So you get the tax deduction on that. And those are the beauty. So that's the thing that you need to look at. Now, if you buy that property, for example, with R1 million and you come to realize that you need to do home improvement because you couldn't spot some renovations or you couldn't pick up certain things because there was a couch somewhere and there was dumping on the ceiling and the rest, and you couldn't pick that up. Now you need the extra cash. Where are you going to get that extra cash from if you've tied all your money in? So if you use bank finance, you've got that leverage to be able to use some of the money that you have to renovate. In worst case scenario, in the best case scenario, you can even do refinancing, take out the equity in that property because you've got a bank financing you and you've got your credit record intact. You can do that. So those are the things that people should look at when they go the bank financing route. And that's why I will personally advocate that you go the bank financing route.
We are taking your questions and comments this evening as we look at why you always use bank finance to invest in property. I am joined by Ekow Quagraine, who's a founder and CEO at B Grant Holdings. And we've got a comment here coming from Glad Shirinda saying agents love cash buys because commission is paid quicker and the process is shorter. Now, Ekow, I want to then, find out from you, one of the things that I think I want our viewers to get a sense of then is how we get the best bank finance, especially when or bank deal, if I put it like that, especially when perhaps you are looking at buying multiple properties at the same time. What are some of the things should we do in order to be able to get the amount that we want from the bank and the interest rate that we want from the bank? Because we know that one of the things, unfortunately, that many of us probably struggle with is negotiating with a financial institution. We sometimes think if they give you a quote that says they'll only give you, 80% of your finance, and they'll give it to you at prime +2, that you don't quite know that you are able to negotiate. And when you do know that you're able to negotiate, we don't know how you go about negotiating. So how exactly do we go about making sure that we get the finance that we want and at the interest rate that we want?
Okay, so very good question, Zama, because to ensure that you get the finance that you want and to get the interest rate that you want, you need to know your credit score, because credit score, the credit score, your credit score plays a bigger role in terms of what interest the bank charges you. The affordability, you need to know how affordable you are, what excess money that you have, how can you afford that, right? The bank will always give you something plus, or they will give you something less. It's always the case, but it's up to you to stand in and say, listen, I cannot take this deal because of A, B, C, D. I know that my credit record is good. So on what basis are you charging me the prime +2? That's the question you need to ask the banker. Once the banker gives you the reason, and it ties into the fact that you're actually in a better position, then you say, two things I do. I never shop with one bank. That's rule number one. I will do all the 4 big commercial banks in South Africa, right? It's funny enough, there was a time a banker friend of mine called me a prostitute because I'm basically shopping around with all this bank, and whatever I get, I come back and I say this. But it's important because once you've done this and you've created that reputation, next time the banker knows that they are going to lose the deal if they don't negotiate the best rates for you. So you actually make life, you set a bar, and your bankers will then accept it, especially if all the requirements are in place. So the important thing is know that your requirements are in place. Ask the bankers the question, why this rate? And if it's something that you can stretch it out to 30 years, 25 years, because whatever reason that you have, or because of your affordability, then do it. But the most important thing, like I always talk from the investor side, you can still do it with the home loan side, on the personal property side. But the most important thing is, can you afford it over the long period? And if you can afford it, then good, but always negotiate with the bank. They will always give you prime plus something. Understand why they're giving you that, and then try to negotiate that. Remember, the contract that you get from the bank is not cast in stones. It's not like that. There's always room for negotiations. There are certain clauses that the bank might not shift away from, like doing a pari passu or the rest. And by the way, talking about pari passu, another reason why I prefer doing bank finance is because normally it protects you from certain creditors. Because let's say things are bad and all creditors are coming to take stuff. If you have, or you've made a bad business move, if you have a fully paid home, the creditor can put their hands on it. But there's no one that's always going to rank first to the bank. The banks don't do that, which is called pari passu, equal footing. The banks will never allow that. There's no equal footing. So there's always a creditor that you owe that will always be behind when it comes to your asset, which is your properties. And that's why this is actually one of the main reasons why I do bank financing.
More of your questions and comments at home this evening is to talk about why you should always use bank finance to invest in property. I want to hear from you at home, some of your reasons why you prefer bank finance, especially when you do have the option to buy cash. Because I think one of the realities is that many of us very likely don't have the means to buy or finance a property cash, and that's why we opt for bank financing. So if you do have the option of doing both, why have you opted for bank finance? And also, what have been some of the ways that you have found to maximize the home loan facilities that you have with the different financial institutions? We've got a comment here coming from one of our top fans on Facebook, Howard Mukatane. Love this comment. He says, the only time it makes sense to use cash is when you are buying a quick flip and you're avoiding, first, bond costs. Second, you stand a better negotiating chance. And yes, you can also avoid the transfer costs by taking occupation immediately, flipping the house and allow the person buying it from you to pay the transfer fees. So that would be a back-to-back transfer. And also avoiding buying properties above the capital gains tax. And that's such an important one. And I think, Howard will probably explore, and maybe Ekow, actually, you can, briefly explain the back-to-back transfer, because I know that some of the viewers probably haven't encountered it before. I mean, there are always different creative ways to make sure that you minimize the costs for yourself as an investor and other people are able to fit the bill.
Yes. Okay. So even that, with what she's saying, it's a smart way, and I agree with her totally. I'm just going to add on because everything she said is perfect. It makes sense.
Howard is a he. Yeah.
Sorry.
I'm saying Howard is a he.
Oh, it's a Howard. Oh, Howard. Yeah, I know Howard. Okay. Yeah. So yeah, he always makes smart comments. So Howard, so what perfect sense. What I will add on in terms of the back-to-back, for example, when I go to, and we do a lot of deals at the auction, where again, we put down our own 10% at the auctioneer, we give that the money, and we find, and that's what Howard is saying, you do a flip. So you're finding another person to buy your property, right? So once you've done it that way, it becomes a back-to-back. So what I do that, let's say Ekow has bought a property from an auctioneer. Then Ekow finds Joseph to buy the property. So Joseph then goes to the bank or whatever, even if he wants to buy cash, it doesn't really concern me. Goes and gets that money. What I've done is that if I bought the property for 100,000, I've put down just 10,000 plus auctioneer's fees, which will take me to about 15,000 rand. And then Joseph will then foot the bill, including the legal fees. Remember, because I bought the property for 100,000 rand and I'm selling to Joseph for 150,000 rand, I've got net profit in it. That net profit then gets used to pay off the legal fees. That's what I'm assuming that's what Howard is saying, to pay off the legal fees. So you've just put 15,000 rand and then you come out on the other side with about 35,000 rand. So you've made 3 times your money. And that's how you do the simultaneous back-to-back transfer, by flipping.
Now, Ekow, I want to find out from you, what are some of the mistakes should we avoid when we are using bank finance to obviously, finance our property investment?
So, yeah, so some of the mistake is, again, it goes back, do the numbers, understand your financial position, don't take up too much just to impress other people. So the bank says to you, you qualify for 3 million. You need to have your own budgeting, your family budgeting, your personal budgeting, to know that the 3 million, I cannot use all of it. Even if I'm doing an investment, somebody must pay for it. So if you're doing that for investment level, I always say, tenant must pay for it. If you're not breaking even in terms of the bond repayment from day one, don't do the deal. That is one side. On the personal level, make sure that you've done your homework, you're comfortable in your skin, so that you don't overrun yourself or you don't stretch yourself too much. Those are the advice that I'll give. And also, again, get the bank to reduce your interest rate. That is crucial, or give you better terms. That will give you, even if the interest will be over a longer period, and people will say, yeah, you pay 2 times, 3 times. That's good. But remember, if you take a bond with a flexi account, so flexi account is something that allows you to pay in more onto the bond. So anything can change. I always say, take the conservative approach. If a bank says we can give you 30 years, Ekow will jump on it. I don't care about the 20 years because I don't know what's going to happen to me even tomorrow. I don't know that. I've done all my homework, but I don't know what's going to happen to me tomorrow. So if I can take as less as possible, if my obligation is as minimum as possible and things turn around, I can put in more. So I always say, don't go for a higher price, go for a minimum as least as possible repayment structure with a bank.
More of your questions and comments at home. We've got Umenzi Butelezi on Facebook saying, I've been able to get financing below the prime rate due to a good credit record. Please share with the viewers what they can do to build a good credit record so that they stand a chance to get a better rate when looking for finance.
Okay, so to build a better or a good credit record, there are actually 5 variables that you look at. Right? Your debt to loan payment is key. It constitutes about 30-35% of it. How quickly you pay, how religiously you pay your loan, how many accounts you have, how frequently are you taking credit or any other line of credit is crucial. So basically what you need to do is manage. You need to be able to pay off your loan, your credit lines on time. You need to be able to use less credit. Credit is good, by the way. I always use credit and I'm an advocate for it. But let's say you've got a credit line of 30,000 rand. It's either you'll be able to pay off, if you use that 30,000 rand, you must be able to pay it off. Maybe you've got a salary or an income that covers it all. If not, then always make sure that your debt to credit line ratio is very low, because that constitutes more, according to FICO, it constitutes more towards at about 35% towards your credit score weighing. So that is very important. So basically manage, take out less. Sometimes also you need to have a mixed debt structure. So in essence, people will just have home loan account and that's it. No, that also sometimes doesn't work to your favor, because the bank wants to see how versatile you are in terms of sticking to your obligations. So a line of credit, a line installment loan from Edgar's or wherever, any retail shop can also assist. But whatever you're doing, make sure that you are staying in control of that credit line, because if it goes the reverse way, it is very deadly. It probably will choke you financially.
And I think, Ekow, I mean, you had said, I think one of the other key things when it comes to understanding how we can better our, credit score is, I think a lot of us always want to find creative ways of bettering our credit record, and obviously being able to use that to negotiate with banks, whether it's, for example, in buying a property or buying a car. And I do urge our viewers at home to firstly just be on top of what your credit score is. You're entitled to one free update per annum across the different bureaus. So do utilize that, because I think that will help you get a sense of what is happening. And in the event where there's something wrong in your credit record, you're able to fix it before you start any application, because you don't want to find out while you are in the middle of an application that there's something on your credit record that is incorrect, or a debt that you had paid off many years ago that's actually still sitting there and saying that you owe. So do make sure that you do that, and you can go to any of the major credit bureaus to get that free score. Now, more of your questions and comments on our social media pages. On Facebook, we've got Ulindi Sichabela asking, what should buyers do if they are given finance by all banks with the same rate? Love this question. This is a good one. So all the 4 banks give you want 500,000 rands, they give you 500,000 rands, and they all give it to you at prime. What should you do?
She is at a very good position. I mean, she's the king or the queen right there, because the important thing is that she can then go in and leverage without having any fear or desperation. Why? Because you've got 4 good banks that are giving you money. So you know that you qualify. So you can then start negotiating bank by bank, saying, this is what I want. Can you reduce? Give me the reason. Again, always ask the banker, tell me the reason why you're giving me this. So sometimes the bank will say, okay, we're giving you 500,000 rand because of the area rating. So now it's not your problem, it's an area rating. So the banks have criteria for areas. So they'll say Centum, for example, is area A. It means it's good grade A. Rosettenville, grade B. Terfontein, grade C, for example. So then they will say, well, even though your affordability is there, we're going to give you only X amount. And because of the area, we're going to give you this because there's a chance that the property will be vandalized. There's a chance that you might not be able to pay. There's a chance that people might hijack your property. Then you go back and say, but the external factors, how does it affect? And I'm talking from a personal experience. External factors, how does it affect the fact that I am so good on paper? So it's very critical that you know your record and you know how good you are on paper, because once you know that, you will always be able to negotiate. And if 4 banks are giving you the same, I'll tell you, if you knock on all the 4 banks, one is going to come back with a better interest rate, or even a higher loan to value, if I should put it that way.
And I think that's such an important one, Ekow, that you point out that, different banks view different areas in different ways, and their appetite for different areas varies. Sometimes even when you look at the respective complexes, for example, you might find that a particular bank won't go beyond, let's say they give you 100% loan to value, but they're not going to go below prime for a property in a particular complex, and that's because they're already overexposed, so they're also managing their own exposure in a particular property. So having that conversation with the respective banks after they've come back to you, Lindy, becomes so important, because knowing that, let's say, the blue bank is not going to go prime minus on on that particular development, but that the red bank is probably willing to go prime minus, then you start the conversation with the red bank, with them, giving you a better offer, because you already have every other bank giving you the same deal that they effectively giving you. So understanding which one is willing to budge on which issue becomes such a serious thing. I mean, I had an experience, Ekow, where there was a property I wanted financed, and I think 3 of the banks came back to me. One of them said they're actually not going to even give a quote because they're already overexposed in that particular complex. They're no longer giving up home loans in that particular complex because they want to manage their own exposure in the complex itself. The other 2 banks came back with, fairly good quotes. And that was for me the first time I had encountered that. I thought, wait, why are there 2 others giving me a quote and the other isn't giving me a quote? And it was only after asking them why they didn't want to give me a quote that I then understood that actually there are other factors beyond me managing my own credit and my own credit score that banks also look in, because the property was great, the area is great, but for them, it's just about managing exposure in the complex, but also in the area. So understanding those kinds of factors becomes so important, especially as a property investor, because you're going to be knocking on the doors of the various financial institutions on different occasions. And so sometimes even asking the various sort of bankers or consultants that you work with around what their credit team is feeling about, or what their sentiment is about certain areas in that time, because you'll find that the sentiment shifts. Sometimes quarter to quarter it shifts, sometimes it will take 2 quarters, so it's never quite the same. So I think when you have your finger on the pulse in that regard, it certainly does go a long way. Ekow, before we wrap up, any final tips for our viewers at home when it comes to using bank finance to invest in property?
Okay, so if you're going to invest with bank finance, you must always make sure that you you've done your numbers, you understand what you're doing. And I'm talking from an investor. I'm putting on my investor's hat now is to say you need to make sure that somebody's going to pay for it. The bottom line is that you must break even from day one, and you must be able to manage the risk in the sense, like you said, the concentration risk. So if you have $1 million, rather split it. You can actually do 5 times leverage on that if you have to put 200 on each. And that in that way, even if the market turns around, or even if the market, the prices drops, you still have leverage, because that may be like the crisis we're in now. It might happen that certain area is booming, Rosettenville is not booming, Terfontaine is booming. So because you didn't put all your eggs in one basket, you will be able to, when you net off, you might come out in a positive position. So it's very critical that your credit record, you don't play with your credit record. Your credit score is very crucial. Make sure that you're always on top of your credit score. If you have problems paying your bond, for example, make sure that you've engaged directly with the bank so that they can give you some grace period. Don't shy away from talking to the bank. Make the bank your best friend. Any problem that you have, you will probably tell your mom or your best friend or whoever that's close to you. In terms of your finances, make the bank or your financier the same kind of person. They're always open to hear you out, and they will always give you the best solution. Because remember, the bank's intention is not to screw you over, if I should put it that way. The bank's intention is for you to go back and take more money on that same property so that they make money. That's how banks make money. Mm-hmm. So to them, it's the best way. It's a win-win situation for all if you understand what you need to do. And then most of the things that you need to do is to just have effective communication with your financier.
And Ekow, that's a great place to leave it at. Thank you so much for joining us this evening.
It's a pleasure.
And that is Ekow Quagraine, who's a founder and CEO at B Grand Holdings. And we're going to leave it there this evening on the Private Property Podcast with myself, Uzamantungwa Khumalo. It has been a pleasure to be with you this evening. And of course, it is a Monday, so I do not leave you alone at 8 p.m. You can catch the Home Shoppers Show with Chad. Until then, hoping you're staying home and staying safe.
Hi, I'm Julia Chen. I'm a restaurateur living in the Cape Town City Bowl. My restaurant, Hallelujah, is situated right in the heart of the city. Over the last few years, the influx of young professionals has created so many new and exciting things to see and do. The rejuvenation of the city has been something really special to experience. There are some really beautiful suburbs in our neighborhood. Nestled below the iconic Table Mountain lies Oranienburg and Tamboerskloof, filled with unique and beautiful homes. There's such a young vibe in the city with an incredible blend of diverse cultures catering to everybody's desire. Within the city, there are so many genuine and passionate people, and you'll find them in places like the Woodstock Exchange, offering everything from handcrafted works of art to a culinary experience hard to forget. For those who enjoy the outdoors, Lion's Head and Table Mountain are phenomenal places to explore. Living in the City Bowl has definitely given me my dream lifestyle, and this is my neighborhood.